they are very short term in their strategy. So you hear clients saying, "Oh, I just want 6 months. I just want within a year. I just want." Some people even say weeks. So although we will still get to details later. So so our goals. So the best thing, write down the goals or what you want to achieve. Then once you can write that out, you can now come around about the stocks that will fulfill that strategy. Now, the second point or criteria is pay attention to market and business news. This is very key. I mean, this is very, very, very important. And I'm still going to go to my experience where clients bought shares years ago and things change. So let's say, for example, 10 years ago, or let's say 7 years ago, when oil price was going for about $100 per barrel. I mean, it's so easy to tell a client invest in the oil and gas upstream company. So easy. I mean, they were all doing well. But for the past 6, 7 years, or for the past 5 years, we've seen a ton. I mean, 2015, there was a significant crash in oil price due to the shale boom. And we're experiencing the same thing now due to low demand. So it's saying, and the future doesn't hold a positive narrative for the fossil fuel industry. So, I mean, as an investor, paying attention to the trend and the information out there tells me that I shouldn't invest in companies like that, especially if I have a long-term goal. Especially if I have a long-term goal, because I've listened to the news, I've listened to what is going on in the sector or in the industry, and also in the company. But if we are not well informed, we'll be more or less speculating, not investing. It's vital to keep up with business news and market trends, especially when the news relates to a company or a sector we are interested in. So we should never invest in a company we don't even know what they do. We should never invest. I'm not saying we should all be accountants or we should, but at least we should have the basic understanding of what they do. How does this company make money? I want to invest my funds in it. How do they make money? So that's the first question. And it's not so hard to know. I mean, thank God for data. They're available everywhere. You can get the company's earnings on their or financial statement on their website. You have access to it also on the Nigerian Stock Exchange. So the first step, okay, let's say I have a company in mind that fulfills my goals. I pick it out. How do they make money? Once you bring out the statement, the financial statement, there are numbers beside each line item. So they can say revenue, may put 2, cost 3. Those numbers, if we go to the notes, so you just have to go scroll down. Let's even say you don't have any accounting knowledge. Just scroll down to the bottom of the financial statement. It's titled notes. You see that number 2. You see it revenue. They will tell you what they did. We sold so amount of bags this period. They will compare it to the previous year. Now you have an understanding of what happened. So if revenue grew, you have an understanding, oh, they sold more of that. Oh, how come? So you start asking questions. How were they able to sell that? Thank God for transparency in the market, which is way better than how it was years ago. So these things are available. They are out there. Even you see the chairman's statement where they'll give you a narration of what happened that year. So all I have to do, read the statement, read the previous year's statement, look at the financials. I start seeing a trend. I start seeing a trend. It's okay, this is what is going on. I mean, by the time you read two, three companies in a sector, you understand the industry. At least you have a strong knowledge of that industry, which helps your judgment. Also, by paying attention to market news and business news, you know the company's doing well. You know the company's expanding. You know, I mean, if they receive a new license, you know through the news. If they discover a vaccine, you know through the news. If there's a merger, you discover through the news. So it is very, very. This is a key part. It's a tedious task because we have to. I mean, we have business day, we have pro share, we have a lot of business blogs and news channels online where we can see these things. Uh, we need to track. I mean, you're investing in the banking sector. You need to follow MPC. What is the committee saying? You are invested in let's say you're invested in the manufacturing industry, you need to consider FX. Or you are invested in a company that borrows a lot, you need to ask the question, these funds that they're borrowing, are they in dollars or in naira? So, and those details won't come to us if we don't look for the news. If we don't, and they are there, they are really out there. And of course, we also come in, I mean, lead securities and investments, pushing out news, updates, and the likes for our clients to be aware of what is going on. Oh, there's a merger, Olam recently purchased Dangote Flour. The news is out there. Some clients made money off it. Some clients made money off it. And so we need to follow the news. We need to follow the news. It's a very, very important aspect of our investment. And of course, we can use this. I think I've said this earlier on. We should never invest in something we don't understand. At least we need to understand the model of the company, how they make money, how they make money. And I'm going to maybe take an example, just a simple example. Let's say Dangote Sugar. Dangote Sugar, of course, they make sugar, but they have a very large market share. So it's a price maker. They have huge, about 60% or thereabout. So that gives me a strong knowledge about the company. Okay, there must be that means this company was doing something well to have this uh, number of market share. Also, I want to know, where are they selling most of their sugar? Where are they selling most of the bags? I mean, all these things are actually available online. Then I say, okay, Lagos, North. Oh, they also export. Oh, beautiful. Now that there's border closure, how can that affect what is going on with the company? So all these things, when you start putting them into consideration, it gives us a view of what is going on or what to expect. Also, how did they get sugar? Oh, they have sugarcane plantation in Adamawa and the Savannah and the likes, but they still import. Okay, if there is a depreciation in naira, that means there's an additional cost to cost of production because they have to import the syrup, the molasses, which they refine here in Nigeria. So, I mean, I'm already thinking what will happen to their costs this year. So the moment I'm thinking about that, okay, what will happen to their costs this year? Can they make so much revenue also in this year to cover up the cost? What is their distribution like? And when we start putting all these things together, and as I said earlier, it's a price maker. So they have that power, they have that strength to push out the 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 price or increase in price to cover up for the increase in cost because of the huge market share. So I mean, this same principle applies to other companies. We just need to sit down and look. Also, I'm going to put this out. Uh, companies. do what they call conference call, and it's actually accessible to everybody. So whereby after releasing, let's say, full year result and half year result, uh, the management, the CFO, the MD, and the likes, they sit down to listen to give update of what has happened in the company, what they expect for the full year, and investors have access to ask questions. So I mean, I don't know if they still keep them. I mean, if you go to some of the websites, especially the banking stocks, just look at the tab called Investors Relation. You see audios of past conference calls. So let's even say you don't know anything about the banking sector. You don't even have a clue. You can listen to that. It gives you a solid foundation, an idea of how these people make money, what is affecting revenue, or what is affecting profit, or what could affect profit. They'll tell you their challenges. So from there, we can really, really know how to go about our stock selection to meet our objectives. Warren Buffett, one of the most popular or most popular investor out there. Most people get interested in stocks when everyone else is. And this is what they call the head effect. The time to get interested in is when no one else is. You can't buy what is popular and do well. And this is a strategy, actually, a strategy very, very particular to Warren because he's a value investor. And I'll also talk about that briefly. Another point for us to notice management analysis. Also, we need to consider the backbone of any successful company is strong management. As investors, we need to consider the people making strategic decisions for the company under our consideration. We analyze the quality, trustworthiness, performance, and efficiency of the management of the company. And this is very key. I mean, you may have a very good company. If you have poor management, it's not going to do well. And even though this is not so common in our culture, people don't really care about. I mean, in the Western culture, it's a key factor. It's a key factor. Also, thank God for transparency in the Nigerian Stock Exchange. Whenever there's an appointment of a new director or executive director and the like, they make it they make it public. So we have access to that. And we need to know who these people are. We need to know probably what they studied. Have they been in the industry for a while? Where are they coming from? Are they coming from within or they were brought from outside? So we need to put all these things in perspective. And when I mean it takes a while. So after we've seen it, after we put this in consideration, we see a trend. I mean, you can invest in a company where you hear random news about the individual and or about a member of the board or the management, and the company gets a beating. So I mean, there are bosses out there that their image, even though they are separate from the company, their image speaks a lot about the company. And whatever happens to them, investors react by punishing or doing otherwise to the stocks. So we have to be careful about that. We need to consider, even though most of the uh, our bosses in Nigeria are not so out there, we don't see them a lot for them to talk and to get a strong perspective of their personality and the like. But nevertheless, we should always consider that. And the whole board and management, you can always see their names on the financial statement. Even a brief description of who they are, what they studied, how long they've been in industry, where they're coming from, what they've achieved. So it gives you a solid background of, okay, these people, uh, they are there to protect my wealth and make me rich or wealthy. So the next thing to consider is company analysis. And this is a very deep part, actually, very deep. And it's not something we can cover in a day. It is very, very deep. This involves using mathematical formula. Sorry, I can't see the screen. And financial data to determine a stock's intrinsic value. So this is like what they call value investing. And you want to know, so for clients or for investors with this perspective, they are not bothered with what the market is trading at. They just want to know what is the true worth or what is the true value of this company. And that is Warren's principle. Is a value uh, investor. So whether it's trading high, whether it's they are not bothered, they just the question what is the value, and it takes a lot of process. You have to build a model. I mean, mathematical formulas. You have to use what they call CAPM. I'm very sorry we can't cover that in this topic. So, but the process is this: they want to arrive at the price. That price tells them the value of the company. They do their due diligence and all that. Okay, I just remember something now and I think I need to mention it. Management analysis. I mean, there are people they call activist investors. So I don't think we have any in Nigeria. So as I said earlier, they are good companies. I mean, solid companies. However, they have poor management. So what these activist investors do is that they take a large chunk or a significant portion of the shares so as to have access to the board whereby they can do some restructuring because they know the company is fundamentally good. And a common activist investor is Bill Ackman. So I'm talking not in Nigeria context now, Bill Ackman. So they take companies, and once they see that, oh, this company has potential, but probably the structure of the board or management or thereabout, they have that chunk to be able to decide on who. So it's also a key factor. I just remember that, and I wanted to mention that. So let's go back to company analysis. So they want to arrive at a value, and that value drives the judgment. So if company A is going for 10 naira, let's say if company is going for 10 naira, yes, and they value the company at 20, and they wake up the next day, company A goes to 8 naira, they are not bothered. Why? Because they have arrived at an intrinsic value. So what drives the judgment is the value. They have the opinion that you people haven't just realized what you have realized. We have gone through the process. We have discounted future cash flows and we've arrived at the value. And this value drives our judgment. And most times, they're always right. And I mean, Warren has done so much in the market, and that is his principle. They look for companies, even companies that we, the major populace, are not focused on at the present moment. They do their due diligence. They build what in finance they call a model, Excel and all those things. Work out a mathematical formula to arrive at. As I said, we can't cover that in this. So ultimately, with this analysis, you want to determine if the stock price is attractive relative to company's earnings. Before you can carry out this analysis, you need to understand the business of the company under consideration, whether the company is growing, if profits are increasing, debt level, what drives earnings. So you can't even delve into this kind of analysis without understanding the company. Because, as I said, it's a lot of mathematical formula. You are projecting financials, you are projecting cash flows, you are projecting a lot of things before you now arrive at a price. However, there's what they call valuation multiples. So this is actually available to everybody. So some clients may not want to go through the process of doing CAPM or discounting cash flows and all that, which is a lot of work. But there's another form of valuation that we can do in our homes. It's called valuation multiples, and there are a lot of them. We have price to earnings, we have price to book, we have EBITDA multiples. But I'm just going to explain price to earnings. Basically, as a client, you want to know the price that investors are willing to pay for the earnings generated by that company. The price that investments are willing to pay for the earnings generated by the company. So I have a small table down here. I believe you can all see. So the first thing to go up to do is to form that this table is to find out what is the company trading at. And the next thing is what is sorry, what is the earnings? So earnings, you get that from your financial statement. At the bottom, they call it EPS, earnings per share. So how did they arrive at that? Your profit, PAT, divided by share outstanding, you have your EPS. Then you bring your price. So what are you doing? You're dividing the price of a particular company by the earnings. It shows that, so you see, like I have your company 3.1 times. So for that company, investors are valuing the earnings 3.1 times, or the price is 3.1 times of the earnings. And also, I need to say that when you are doing valuation multiples, only consider companies in the same sector. So you can't do uh, also, yeah, the number in itself is not meaningful. The number in itself is not meaningful. So you have to compare, and you can only compare with other companies in the same sector. So you can't be doing valuation multiples for a bank and you're comparing it to an oil and gas company. They are not in the same sector. So let's say you want to do for banks. So you bring, even banks are also divided into tier one and tier two based on their capitalization and cash adequacy ratio. So you still also know the banks I'm comparing each other, I'm comparing with the, I'm comparing together. So you pick company A, company B, company C. I've assumed that they're all in the same sector. And you do that price to earnings for the three of them. You have the value. Then you find the average. So for this example, the average for the sector or for the industry is 2.6. Now, company A's own standalone is 3.1, while company C standalone is 2.0. It tells me something. Company 3.1 has a lot of value. Investors have valued it more than the industrial average, which is 2.6, while company C is 2.0. So on the surface, company C is very ripe for investors to buy because it's what they call undervalued. But we have to be careful. We can't just look at it alone. You also need to look at what is going on in that company, particularly. Why are investors not buying? So if there are other issues, then you know that the decline in price is probably due to other things going on in that particular company. But if you can't find any, so the company is doing well, everything is fine. However, the price to earnings is so low, means investors are not looking towards that company. Probably company A is more visible or company B is more visible. They're out there. So people are not looking at company C. So it shows that you should buy company C because it's the industrial average is 2.6. So the same principle applies to valuation multiples. price to book, EBITDA margin, EV to EBITDA, tons of them. But there are things that we can easily do at home compared to to uh, what they call discounted DCF models. So uh, something just came to mind now uh, while talking, and it has to do with I have to go back to people with retirement goals, and you're focused on dividend paying stocks. You should also consider something that they call dividend yield. So company, oh, I mean, it's not even here, so I can't point to it. It just came to mind. So I have two companies. They both paid 2 naira. However, company A is trading at company A is trading at 15 naira, whereas company B is trading at 10 naira. So we do what they call dividend yield, which is the dividend price, which is 2 naira, or the dividend amount, which is 2 naira, divided by the price, which is 15. So we say 2 divided by 15 times 100, we have 13. That is the percentage. So it's called dividend yield. So it's telling you the percentage earnings that you've earned bear the dividend payment. Now, I said there's another stock that paid, company B that paid 2 naira, same 2 naira. However, that stock is selling for 10 naira. So you say 2 divided by 10 times 100, you have 20. So even though both are paying dividend, the dividend yield on one was 13.3, whereas the dividend yield on the other was 20, which shows that I'm getting more from the one selling for 10 naira or for the one selling because it's giving me 20%. So that's also something to consider, that what is my dividend yield. So when we see numbers, so when I see company A declares so naira, I need to look at the price too. What is the price? Then you say dividend divided by price. It gives you a yield times 100. It gives you a figure. You'll be surprised that you can compare to another one that gives you something similarly small. And the dividend yield is so high. So that means for my purpose, I need to consider that, because this company is so cheap and they pay dividend consistently. And most companies, they try to maintain their dividend payment. Even if they're not increasing it, they maintain it, because investors react bad to decrease in dividend payment. So most companies always try, if you can increase, let's maintain the same payout uh, for for the next year. Okay, so that just came to mind. So company analysis, I believe maybe some other time this will be addressed in more detail. It's a lot of calculation and a lot of work to go about that. However, we can go about the what they call valuation multiples. They are available. I mean, you can just go to your Google Chrome, just type valuation multiples. You'll see tons of them, tons of them. And then there are things that you can easily, data you can easily get from the financials and simple mathematics, division, addition, then we can easily go about our results. When stock, this is a quote by Peter Lynch, also a famous investor. When stocks are attractive, you buy them. Sure, they can go low. I bought stocks at 12 that went to 2. So I bought stocks at $12 that went to $2, but then they later went to $30. You just don't know when you can find the bottom. Now, this is very common. Clients are always trying to find the bottom of the market. The truth is, except you have a glass that you can consult, nobody, you can never find the bottom of the market. You can't. I mean, if you find it for a company, it's just by pure luck. You can't consistently find it. You can't. So, I mean, this is a famous, a big investor. He said bought at 12 and it went to 2. But because when you bought, there was a value in mind. The value was driven by the data you analyze, it was driven by the understanding of the company. And then you were able to you were able to invest. Then you woke up and things did not work out as at that period. But that the fundamentals, what you analyze hasn't changed, then there's no reason to fret. There's no reason to fret. And that is why, I mean, in the company, we've been calling a lot of clients and saying there is no reason. I mean, last month, people really shied away because of oil prices. But now, the same oil price has gone up. I mean, it's above $30 now. So within a month, some people that bought shares in April, they're in money just within a month because the fundamental hasn't changed. The fundamental hasn't changed. I mean, some companies will be severely hit, but some are actually, and I say most are actually doing well. But investors were worried, and there was a dip in price. However, we know, I mean, first quarter result has come out, and we could see how they perform. So it's just a matter of time that okay, I have this value in mind. Then these stocks will eventually go back to that price. A lot of things are coming to mind, and I'm trying to put everything in perspective. Let's go to the next. Also, I would like to say this. Uh, I'm trying as much as I want to make it very practical, and I'm trying also not to downplay any company. But let's say, for example, understanding what how a company makes money. So when I think around April or March, when there was that significant dip in the market, I mean, I started telling a few of my clients buy MTN. They were worried. Market is not stable, this and that. I said just buy MTN. Like, you're not seeing what is going on because why? They did not understand how this company make money. I mean, I'm not just particular about, I mean, the telecom, and I'm the telecom. So you are home, you're making more calls, you are using more data, you are watching a lot of Netflix, you are doing all that, you are using something, you are using data. And for you to be able to use data, someone is providing it. The telcos. So even though some companies might not do so well, or even though I see a dip. So if I see a dip in such a company, I wouldn't even think twice because I know that they are just ripe for this season. They may have, they might be impacted in other areas, but at least revenue generation, client subscription, people that have seen that everybody will have to reactivate. So, and we saw that in the first quarter result, and I'm expecting even more positive earnings in second quarter. And the same thing applies. People are really stocking food. People are, I mean, so a lot of what they call it now, uh, goods in the warehouse will be sold. If companies are not producing as much, they have to dispose things in their warehouse. So, and of course, some specific companies also have to be very creative to make the most of this season. So, what I'm just trying to say is that whenever there is a dip in the market, it's not a time to worry. We need to sit down and analyze what is going on. We sit down with a particular what is going on here. And especially if we have a long-term goal, that means you should even be waiting for the dip. The dip in the market or in a particular stock means I can buy more at a lower price. Because with time, there will be that rally in 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 value. Okay, before I go on to technical analysis, this is the part that a lot of investors like. A lot of investors in Nigeria are technical analysts because they want to make money so fast. And this takes a lifetime to learn, and and involves using a lot of tools. But I'm going to just touch on a few things to help us. Before I go on, I would like to say that if, as a client, you don't want to, you find this a bit cumbersome, there is no problem. We have what we call mutual fund, and in Lead Securities and Investment Limited, we have two. We have what they call uh, LFIF, Lead Fixed Investment Income, LFIF Investment Fund, and we have what they call LBF, Lead Balance Fund. So these funds, the mutual fund, so they have managers that will go through this stress for us or for you, and their goal is to make money. So the whole studying the market, studying the stock, that is what they are. So all you just have to do is just invest. As I said, we have two funds at the moment. So you invest in that, and then it saves you the stress of personally going through this process. So let me go to our time is going. Let me quickly go to technical analysis, which I say is the favorite of most investors. This refers to the analysis of historical market data, including price and volume. So for this analysis, most investors have the feeling that the past tell the future. So that what has happened will happen again. So you're constantly looking at what they call the line graph for the price to see the trend and the volume. It attempts to predict future price movements to determine whether current price trend will continue or not. So because you know that if I've seen a particular trend, maybe there's a dip, I will go to, let me just go to an image. This is just an example. So company here, I did not put the name of the company. So this is a price trend. And below is what they call volume. Now we have what they call lead trader. You can also see the price trend in our lead trader. You see the movement of the price. So for this, you can see the movement. So for technical investors, to be sincere, there are a lot of tools. We have RSI indicator, we have accumulator and distributor. We have, also give us what we call candlestick reading and all those things. It's very deep, very, very deep. But they are just looking for trends, which they feel is going to be repetitive. But I'm just going to touch on a few things. And the first thing is resistance and support level. So this is just an example. And now, when you see a stock moving like this, so you can see at the top, when it got to the resistance, it dipped. And when it got to a certain level, it also increased. So that portion at the lower part is called the support level. So the idea is you want, as I said, for technical analysis, the idea is historical data or historical price movement tells what is going to happen in the future. So when I see a stock moving towards a previous support level, I need to see what is happening to the volume. I need to see participation in the market. So if I'm seeing significant participation on the sell side, so I may be careful because I may feel, there might be a new support level, that is, it might dip lower. So, but I'm targeting it. So for people looking at the dip of the market, so I'm targeting it. And most times, I've moved to another graph now. Oh, sorry, you can't see my points when I point. But anyway, that's the idea. that when it dips to a particular level, and also they also consider what they call 52-week low, 52-week high. So when a stock is moving towards its 52-week low, you have to consider the volume movement in the market because the volume tells you the participation. Uh, I mean, there's on our lead trader, I also go back to the lead trader platform. It gives you what they call market position. From the market position, you see the amount of people trying to sell. You see the amount of people trying to buy. I mean, it's just the law of demand and supply. Now, for technical analysis or analysts, they don't want to know if they are not bothered about what's going on with the company. Is the company making money? Is the company, they care less about that. What they are focused on is just the volatility in the market. It's just the volatility in the market. So, so now you consider the volume from, as I said, from the lead trader platform. You consider the volume, which helps to your judgment. So if it's getting close to, so for example, it's getting close to the 52-week low, and there is a lot of demand for it, a lot of demand. So you see volume on the demand side, something million, which is way more than what is on the offer side. That is people trying to sell. It tells me something. This will not get to the low, the 52-week low. It's likely to peak from this level. At this price range, this stock is likely to peak. And most like, I mean, everything working together, it peaks. It peaks. Also, when you hear news that there is what do you call a merger, company A is trying to acquire company B. That is also easy way to make money. Just go and buy company B, as many units as you can buy, because you are going to start seeing a rally in company B. So that's also one of the things that what's it called now? Technical analysts. That's one of, I mean, it happened in Access Diamond. A lot of people made money from Diamond. It happened in Olam Dangote Flour. A lot of people made money in Dangote Flour because of the acquisition or merger, if you like. So you are looking at the 52-week low. There's also this indicator, we don't have it here, it's called RSI. It shows overbought trend and oversold. So we don't have it here, I couldn't get it. So it shows you when the stock is overbought. That means they've bought it so much. So there's that possibility that it will be sold. People are trying to take profit. It also shows you if it's oversold. That means they've sold the shares. That means there's a high possibility for people to start buying it. So there are tools. So if you want to be a technical analyst, you have to invest in tools and of course in understanding. Some people also read charts, double shoulder, cup. I mean, those are deep things that we can't cover in this webinar. But they show trends. So I've told us about support level, 52-week low. Also, when we see a dip in a stock that is fundamentally strong, because in our market, and I'm just going to chip this in, we NSC released a data called FPI, Foreign Portfolio Investment Data, to show how foreign investors and local investors are investing in the Nigerian Stock Exchange. Now, the foreign guys, we have all the funds coming from outside the country investing in our local market. Now, they are concerned about forex, so that is a risk for them. So they are very fast to sell when there is a slight distress on the naira. But for a local investor like me, I am not bothered because I don't have any dollar liability. Now they pull out their funds because they are worried that naira is not stable and everything. So you can, and when they start pulling out their funds, you see a significant drop in the market. But for an investor, you should sit down and say, what is going on? Now, if economically nothing has significantly changed, it's just FX and all that, that means it's an opportunity for you to buy. Because when maybe the CBN comes in to assure these investors that, oh, Naira is stable, we will fund your dollar liabilities whenever you want to exit, or we will create a forward market for you. They come back. However, you are already invested in those stocks that they want to buy. So when they bring their fresh funds, you are gaining. You are gaining. So I mean that is why we have to constantly sit to analyze everything we see. Like what they call accumulator, distributor, is also that technical analysis. What's the big guys? I mean, to do technical analysis, you have to hold a sizable portion. You have to really invest a sizable portion so that movement, a slight movement of 20 kobo times so many units, you are in money. A slight movement of 50 kobo times so many units that you have money. So what they do, I mean, you see market dipping, but you see huge volumes. Even though prices are going down, but volumes are huge. Someone is actually accumulating. Someone is actually accumulating. And okay, our time is almost up. If I would like to ask if there's any, we're even at the end. So if there's any question, please kindly. Uh, so actually, we are at the end of the because of time. We are at the end of the whole webinar, and this is opportunity for clients to ask questions. I hope we had a good time. So I'm waiting for questions, please.
Good afternoon, sir. My name is Tunde Oladapo. Are you hearing me?
Please, if you have any question, just drop a message. I'm going to see to read. Yes, please come. Please come. Hmm? Okay. Someone asked a question on stock recommendation. First, I would say we should look at. I have some stocks that I would like to recommend. First is in the brewery sector, international breweries. Uh, Currently, they are loss making. I mean, if you check their financials, you see. But however, if you check what they call the cash flow statement, they're making tons of money. It's I don't know what it's trading. It's maybe probably less than 5 naira or so thereabout. And for people out there, I mean, you go out a lot. You see the awareness for the drink, especially for trophy and the likes. And we may not really appreciate them in Lagos because people in Lagos, we are focused on some other companies. However, outside Lagos, they have a stronghold. Even though even in Lagos, you see their product, you see the trophy can and everything. So it's a company we should consider. It's not out there, but it's a company we should strongly consider. It's so cheap compared to others. There's a company with tons of money, especially in their cash flow. So if a company though making, I mean, it's owned by the biggest bureau in the world, AB InBev, they had to acquire uh, two other companies in Elisha and in, uh, in Port Harcourt and in the east, and those company had debts, so they had to clean the books. I mean, pay off and all those things. So it's going to take a while before they break even and make profit. However, it's a company that is making money in terms of cash now. So it's cheap. They recently did a right issue. I mean, so the money has been used to pay off most of the debts. So it's a company for us to look at, especially for people looking long term. Please, long term. So for short term investors, that then I wouldn't give that. But we should for long term, yes, international bureaus. Also, in 2015, we saw a lot of the manufacturer and the consumer goods company going what they call local in terms of sourcing for local raw materials because we had FX issue in 2015, also due to crash in oil prices. So the likes of flour mills, the likes of Dangote Sugar, the likes of Unilever, they started sourcing for raw materials locally because it was more expensive to import those things. And if it was more expensive in 2015, you can only imagine what is going on now. However, those companies have structured. Now, I'm not saying 100% of the raw materials or machineries are available, but a large chunk of it. So some of that to be using sorghum, some of them. So they just had to rearrange their model. So those are companies. The flour mills, they're in the food business. Your Dangote Sugar and the likes. They have plantations, local sourcing and the likes. Also, some few years back, a lot of companies were exposed to borrowing foreign loans, especially companies with parent companies. I mean, local companies with foreign parent companies like your Lafarge and the likes just take dollar loans to expand. Then we had a crash in dollar. I'm talking about 2015. So they had to restructure so their debt. A lot of right issue and the likes, and they've corrected. So I'm going to give WAPCO. It's so cheap. I know that a lot of people bought WAPCO at a very high price, but it's cheap now, and there's no better time to buy it. They've corrected their books. They've paid up off all the foreign loans. Attractive, very attractive, and cheap. I also go for the bank names. I mean, the Zenith, the GT, and I'm sure people. So another question. Yeah, the lead trader platform. Uh, it would be nice for the client to send a mail to us so that we can send their login details. So the lead trader platform helps us to trade directly with in the market. It's a very wonderful platform. I've used it and I also take clients through the process. Very easy to use. You are more or less a trader. You see what is going on in the market, live and direct. You buy live. So you see, I mean, even if you don't understand, you can call any of our representatives to explain things to you. Is leadtraderng.com. That's the website. However, if you don't have your login details, you can't log in. So you have to send a mail to our customer service to get your login details. The moment you log in, you can call to they will take you through the process. Uh, so I've given recommendations. I also address yes, all our clients. Yes, all our clients. However, for you to have access to the lead trader, you need to send a mail so that you can get your login details. The address is leadtraderng.com. Okay. Someone asks if you could make money daily. I wouldn't advise on that because it's very hard in a market like ours because it's not so deep. The Nigerian stock market is not so deep in the sense that there are few stocks that you can really buy. We don't short stocks in Nigeria. There's what they call shorting because you expect so you can bet against a stock to go lower. I mean, we invest in stock to go higher. But so it's very hard for you to be making money daily. So I can't guarantee that you are trading, but with some time, if you give some time investment horizon, yes, you can make money. And I've recommended some few stocks. They are volatile stocks. Oh, sorry. I've mentioned consumer. I said flour mills. I've mentioned WAPCO. I've mentioned Dangote Sugar. I've mentioned international breweries. So just to cover other, it's easier to work with the banking stuff because they are out there and they are very volatile. But all those companies are also good. Flour mills, Dangote Sugar, um, uh, WAPCO, and the likes. Okay, someone asked a question about GSK. So, I mean, GSK pharmaceutical. Personally, I don't follow uh, personally now pharmaceutical, but with the COVID, a lot of attention will actually be shifted to the pharmaceutical. The major thing, I mean, that happened in GSK for the past few years was that they sold the drink business. I mean, after that, nobody, nothing else. I mean, nothing else. So, but now with the concern for the health sector and all, we have name it, fitting, they're in the health sector. So now I guess extra attention will be paid to them, and then we can go on. So I'm not seeing any new question. So regarding, I would like to say this again. This process, if for any reason we find it cumbersome, we have two funds in the house. One is called LBF, Lead Balance Fund, and the other is called LFI, Lead Fixed Income Fund. We can get lead details on it after the call, but they save us the stress. You invest in them, the manager does the stress for you. If there is no other question, I think we'll end it there. So I want to appreciate everyone for coming. I hope we've been blessed. I hope we've been educated too. And uh, if you have further questions, please send a mail to us at our customer service at leadcapitalng.com. We'll answer all questions. All questions. I see people asking for the recorded version of this, people asking for the slides. No problem. We'll just send a mail to customer service at leadcapitalng.com. Now, if you want more details of the lead trader, you want your login, all our clients have access to lead trader, you want your login, please send a mail to customer service at leadcapitalng.com. You'll be attended to. Thank you very much. You can get the slide, you can get the audio. I believe they are all available. Thank you very much. Thank you very much. Please stay safe. Bye. How was it?